Welcome to Talk Tickers. Today, we're diving into the Janus Henderson Q2 earnings report. And this one was interesting. The stock actually took a little dip in the pre-market, but then it seems the market really digested the numbers, and it ended up closing in the green.
Okay, let's jump right in. The headline number that really grabbed everyone's attention was this: GAAP EPS of 95 cents. Now, this wasn't just a beat, it was a decisive one, clearing what analysts were expecting by more than 18%. And this wasn't some narrow win either. The beat was broad-based, right across both the top and bottom lines. Revenue came in strong, but just look at that assets under management number. It swelled by 27% year over year. That's a record high for the firm. So yeah, the headlines look fantastic. But a beat this strong really makes you wonder, right? What was the engine that powered this quarter? The story isn't just in that earnings per share number, it's a little deeper than that.
Here's your answer. The story of this quarter, in one word, is flows. A massive $46.7 billion in net new money came onto their platform. I mean, a figure like that dramatically reshapes their whole AUM picture.
Now, what's really fascinating is where that money came from. That newly closed partnership with Guardian Life was pretty much the whole story. It was the overwhelming driver, contributing roughly $46.5 billion of that total, all in one go. Management, of course, was quick to point this out on the call. They said even if you strip out that huge deal, flows were still positive. This makes it 5 straight quarters of positive net flows, which is a key differentiator in an industry where, let's be honest, a lot of active managers are seeing money walk out the door.
So, we know the Guardian partnership drove this massive inflow. But it's so much more than just a one-time AUM boost. This really represents a significant strategic shift for the whole company.
This partnership doesn't just grow their fixed income AUM to over 30% of the company's total, it also provides capital to speed up innovation. And we're already seeing it happen. Guardian provided a $100 million seed investment for the immediate launch of their new JBS ETF.
Okay, so the numbers are strong, the Guardian deal is a game changer. But what does management think comes next? Beyond the hard numbers, the tone on the call was what I'd call constructively bullish. They were really focusing on strategy, not just short-term predictions. Management laid out a really clear 3-pillar strategy. It's about protecting and growing their core businesses, amplifying their strengths like ETFs, and then diversifying into new areas. And they made sure to underline all of this with a firm commitment to returning cash to shareholders.
So naturally, the question on every analyst's mind was, okay, great, but what should we expect in the coming months?
As is pretty typical for the asset management world, Janus Henderson didn't offer any formal EPS or revenue guidance. Instead, they really directed the market's focus toward executing their long-term strategy and, of course, capitalizing on that new Guardian partnership. These results are really impressive for Janus Henderson, for sure. But to truly understand how significant they are, we need to zoom out a bit. How is the company performing not just on its own, but against the broader industry currents? So while the asset management industry as a whole is facing some pretty tough headwinds, like pressure on active flows and shrinking margins, Janus Henderson seems to be benefiting from its own specific tailwinds. That trend of insurers outsourcing their asset management is a huge one, and so is their own strong footing in active ETFs. And you can see the results of them navigating these dynamics right here. I mean, look at this. Over the past year, the stock has significantly outpaced not just the S&P 500, but also its direct sector peers. It shows the market is really starting to reward this strategy. So let's put it all together. We have a clear earnings beat, a transformative partnership, a confident management team, and really strong relative performance. So what does this all mean for the stock going forward? Well, here's our call. We are initiating our rating on Janus Henderson outperform. And the thesis here is pretty straightforward. It feels like the market is underappreciating just how stable that new fee stream from the Guardian AUM is. When you combine that with their consistent active flow story and the operating leverage they have to rising markets and continued ETF growth, well, the setup just looks really attractive. Now for our plausible trade idea. The opportunity we see is really in betting that the market is eventually going to re-rate this stock higher, as the durability of these new flows from the insurer channel becomes clear. A more aggressive way to play this could be through long-dated call options. That would let you capture the upside from a potential re-rating that's driven by catalysts,
like another big insurer win or outsized growth in their new ETFs. And as always, this is not financial advice.